Hello, everyone, and welcome. We're happy to have you with us today. My name is Carrie Ferg, and I'm your host for the Manta Trends webcast, How to Boost Your Small Business Credit Score. We hope you'll tweet about today's event using hashtag MantaTrends. I want to take a few minutes to cover some important housekeeping items about the event. Let's first talk about your screen. During the webinar, you should see a slide area, which will allow you to view the webinar. On top of the slide area are three tabs: Ask a Question, Attachments, and Rate This. Click on Attachments to view articles and links related to small business credit scores, and Rate This to give us your feedback about today's webinar. Click on the Ask a Question tab to ask a question anytime during the webinar. We'll do our best to respond during Q&A at the end of the event. If you're having technical difficulties, please email webinarhelp@manta.com. My colleague Mel is answering your technical questions, so just send her a note. I'd like to introduce our expert today, Gerri Detweiler. Gerri Detweiler is Head of Market Education for NAV, which provides business owners their personal and business credit scores for free and a marketplace of financing options personalized to your qualifications. She's been helping individuals get smart about credit for more than 20 years and has been quoted in more than 3,000 news interviews. She is also the co-author of Finance Your Own Business, Get on the Financing Fast Track. We're glad to have you today, Gerri.
Oh, thank you, Carrie. Well, I'd like to start by sharing a story that we received recently from a business owner. They have a recycling manufacturing business, and she wrote to us that when she started her business, she relied heavily on her personal credit. She said, I started out with a really good credit score. Now it's not so great, not because of derogatory marks, but because I've maxed out. I've financed forklifts, trucks, manufacturing equipment. I'm the personal guarantor on our lease. And the only way I can see out of that is by building credit for the company. But you have to be thinking about that along the way. You have to be sure that when you can, you're getting credit in the company's name so you can start building business credit. Unfortunately, they don't give you a class on that when you're earning your MBA. Well, we don't want you to go through the same kinds of problems that entrepreneurs experience. And so what we're offering here today, thanks to Manta, is a crash course on how to build business credit. And if this seems like a mystery to you, don't be surprised. As you can see from these survey results, from a survey we did early last year, many small business owners don't even know they have a business credit score, much less how to interpret theirs or get theirs. So if you're a little bit confused by business credit, we're going to change that right now. And as Carrie mentioned, we will take questions at the end. I'm going to give you a lot of information quickly, so don't hesitate to use the Ask a Question button to ask your own question. Now, the good news is those business owners that do understand their business credit scores are significantly more likely to get approved for financing, of course, at better terms if they have strong credit. So in a minute, we're going to share a very simple free tool that you can use to check and monitor and build your business credit. But what I really want to encourage you to do today is to get started, not to wait until the last minute when you've got a big job, a big order, a big opportunity, and you have to say no because you can't get the funding or the financing that you need. So business credit, I think many of us know that with credit ratings and credit scores, better credit means better interest rates when we borrow. That's true of personal and business credit. But for the business owner, there are other reasons why building strong credit ratings in the name of the business is so important. One is that it can help you to shift from borrowing personally to borrowing in the name of the business, and to move away from risky personal guarantees so that your personal credit and finances isn't always on the hook when you borrow. It can also help you improve your cash flow by getting better terms with your suppliers. So an example, a restaurant owner I knew who had a seafood restaurant, and on Friday he would get money from his investor. He would buy the seafood, have the restaurant, do sales over the weekend, and then he'd pay back the investor. And that was really cutting into his margins, the money that he had to pay to his investor. So when he built business credit, he was able to get the seafood on terms. He didn't have to pay for it up front, sell it, pay it back at the end of the weekend, and then he saved the money that he was paying to his investor. So it can help you get better terms. And it's not just about financing. Business credit can also help you win competitive bids. And if you want to bid on government contracts or you want to sell to a very large retailer, they are very likely going to check your business credit reports as well. Our founder at NAV, Levi King, he had a sign business, and he bid on a large contract. It was a car dealership, very large contract to do the signs for them. And he lost out on the bid. And he found out later that his competitor had included his, meaning Levi King's business, that business credit report with their bid, the competitor did. And it wasn't that it was bad, it was just that he hadn't built business credit. And so the competitor was essentially saying to this car dealership, do you really want to take a chance on this company that hasn't built business credit and give them this big job? And needless to say, they didn't. So there's a lot of reasons to build it. And I want to emphasize that anyone can check your business credit report. They do not need your permission. They don't have to jump through any hoops like they do with personal credit. They can check your business credit. And in fact, it's sometimes very smart for you to do so on the businesses that you do business with, but we won't get into details about that right now. Now, when you go to check your business credit, it can be a little bit confusing at first. There are credit agencies that are dedicated specifically to business credit, like Dun & Bradstreet or D&B. There are also credit bureaus that have both personal or consumer divisions and business credit divisions. So Experian is a good example of a company that provides personal credit scores and also credit reports and scores, and also business credit reports and scores. Equifax also has a business credit division. What I want you to keep in mind here is that even though some of these bureaus they may have both business and personal divisions, it's very important for you as a business owner to separate your business and personal credit. Remember the business owner we talked about at the beginning. You don't want to be in a situation where you're stuck and relying on your personal credit. You can't shift over to using business credit. So the very first thing you want to do in this whole process, if you haven't done so already, is to separate your business and personal finances. Get a business checking account and use it strictly for business purchases. Get a business credit card and use it strictly for your business purchases. If you're not doing that, that simple step is going to help you start to get off on the right track. Now, if you see your business credit ratings, the numbers are going to look a little bit different than they do with personal credit. If you check your personal credit scores, and many of us have access to them through a variety of sources these days, you probably know that the best score in most credit scoring models for personal credit is 850. That's a perfect score, very high credit score. But if you're looking at business credit scores, it works a little bit differently. So a perfect score might be a 100 if you're looking at an Experian IntelliScore, or a 100 if you're looking at D&B's Paydex score. And there's also a FICO score that's dedicated exclusively to small business. This is called the FICO Liquid Credit SBSS score. And if you are thinking of getting an SBA loan anytime in the future, this is a score you want to know about, because for many SBA loans, this score is used to pre-screen applications, which means you have to have a sufficient score to make it past the initial screening. That score runs on a range of 0 to 300, and 300 is the best score you can earn. And many lenders are looking for a minimum score of 140 to 160 or higher in order to pass the pre-screen. And again, I want to remind you that I'm giving you a lot of information here. You can ask a question using the Ask a Question feature button on your screen. So let's look at an example of an actual business owner and a snapshot of their business credit ratings here. And you see they have an Experian rating, IntelliScore rating that's fair. They have a D&B score that's good and a FICO score that's good. Now, a couple things I want you to think about here, and one is that it's possible that the difference in these ratings here are due to a mistake on one of their reports. Most business owners have not checked their business credit reports, and as a result, they don't know if the information is accurate or not. But if the information in your report isn't accurate, any score that's produced as a result or any decision that's made won't be accurate. So it's absolutely essential that you check your business credit reports. We do see a higher error rate on business credit reports. There's a couple of reasons for that, but I think one of them is that business owners just aren't looking at them. And you really are the only one who can say, yes, this is accurate, or no, this isn't. So you want to make sure that you look at your reports and make sure they're accurate. Ultimately, it's really up to you to make sure that the information is correct, and if it's not, to go ahead and initiate a dispute so you can make sure that it is correct. This is another deeper dive into an Experian credit score. Again, an actual business is using one of NAV's tools that I'll tell you about in a moment. And while it may look overwhelming at first glance, it's really very similar to personal credit in the sense that they're really, when they look at these credit reports, they are looking for activity and what kind of history you have, how much debt you have, and whether you've paid your bills on time. I mean, those are the essential factors that go into a personal credit score and the essential factors that go into a business credit score. With business credit scores, they can get a little bit more granular, a little more detailed on the payment information, so I'll show you that in a moment. And it also can be weighted more heavily. So with your business credit reports, when you're developing business credit, it's important to pay on time. But I also want to add that the first step to building business credit is to make sure that you have companies that report. If you don't have companies that are reporting information to the credit bureaus, you don't have a credit history, and a score can't be produced. This is more confusing with business credit because with personal credit, you get a credit card, and it's most likely going to report to all three bureaus. Not necessarily true with business credit. So you do have to have companies that are reporting, and one of the tools that you'll find in NAV's free membership is called the Business Launcher, and that will actually show you companies that will report. So if you don't have references reporting, you don't have a credit history, you can find them there so you can get started. I just mentioned that payment history is particularly important when it comes to building business credit, and that's because they look at it a little more detail than they do with personal credit. So with personal credit, if you forget to pay your credit card bill and you pay it 5 days after the due date, it's probably not going to show up as a late payment because you typically aren't reported as late until you're 30 days late. But with business credit, they use something called Days Beyond Term, or DBT. So they can actually look at when your invoice was due and count down the days either past that invoice that you paid your bill. So let's say you have an account that's due net 30, so it's due 30 days after the invoice date, and you pay it on day 35. You're actually 5 DBT. Now, that's not as serious as being 30 days late on a credit card. You'll see that drop your personal credit score quite significantly. But it is a factor. It is important to try to pay as close as possible to the invoice date. You could actually get some credit, so to speak, for paying before the due date. So it is more granular. It is important to stay on top of it. So let me recap the steps for building strong business credit. The first is that you want to make sure that you separate your business and your personal credit. So if you have not done this already, you want separated business and personal finances. Get a business credit card if you don't have one and use that exclusively for your business purchases. Review your credit reports to see whether they're accurate, see whether there are possibly negative information or mistakes that could be corrected and could improve your business credit scores. And then also make sure that you have accounts that are reporting so that you're building a positive history. Without those accounts, you won't be able to build a business credit rating. When you do get accounts with companies that report, try to keep your debt low, pay on time, and if possible, pay early. And with those basic steps, you can build strong business credit. Now, if you haven't seen your business credit scores and you want to, you can get two free business credit scores and personal credit score at NAV. You can simply go to nav.com/Manta. So on the screen you see nav.com/Manta. This is truly free. It's not a trial offer. There's nothing to cancel. And in addition to your credit ratings, you're going to get free tools like our credit sweeper. It's going to help you dispute mistakes, and our business launcher, which will walk you step by step through the process of building strong business credit. So if I can leave you with one piece of advice today, it would be to get started building your business credit now. It is a process, and it does take time. You want to give yourself time to build strong business credit and enjoy all the benefits that it offers when you do. Thank you.
Thanks, Gerri. We'll open it up now for a few questions from the audience. One of the questions we had come through, Gerri, is when we set up our business credit card, we had to use our personal information. Is there any way we could have done that differently?
Yeah, that's a great question. Most business credit cards, until you are really well established, and by well established I mean at least 2, probably 5 years in business, at least $2 million in revenue, most of them are going to require you to, they're going to check your personal credit and require a personal guarantee at the beginning. That's okay, though, because most business credit cards report to the business credit agencies, and they don't report on your personal credit unless you default. We do have an article on this on the nav.com blog that specifies which report which ways. So that's how you start, but now that you're building business credit, then you do have the opportunity to eventually move away from those personal credit checks and personal guarantees.
All right, we have another question about debt-credit ratio. I think that's known as credit card utilization. How does it impact small business credit score?
Well, I actually recommend that business owners try to keep their utilization. And by utilization, what we're talking about here is your ratio between your credit limits and your available credit. And I recommend you try to keep that in the same range as you try to keep your personal, which is usually the 20 to 30% range. Ideally, with personal credit, if you can stay below 10% of your available credit, that's best, but it's okay if your credit score is otherwise strong to creep up a little bit higher. What's interesting with business credit is a lot of times you will be building credit with terms, so it's not necessarily a credit line with a credit limit, but it's where you're buying something, you're paying it in a certain number of days, 20, 30, 60 days, so that factor isn't always relevant, but it does come into play, and there are some credit scores that can blend the owner's personal credit and their business credit and get an overall ratio. So if you can stay in that utilization range of 20 to 30%, you should be fine.
Gerri, here's another question. Are there credit cards you would recommend applying to establish business credit?
Yes, so there's 2 places to find those. We have a nav.com article that lists how all the business credit cards report, and then in the business launcher, we actually have a list of credit cards that you can use to build business credit. So once you sign up for a free account with Nav, use business launcher, and you'll find it in there.
All right. Another person commented, in my case, my personal credit is destroyed due to super high student loans. My business keeps getting business credit cards. Will my personal credit score kill my chance of getting a business card?
It depends. It definitely will be a factor. So it depends on what the student loans are actually doing to your credit. If it's the amount of debt, then you may still be able to get the business credit card. If it's that you've missed payments and you have late payments due to the student loans, then that could potentially get you turned down. I will add that with student loans, if you're in an income-based repayment plan or something like that where your payments are reduced, that doesn't hurt your credit score, so it's still possible you could qualify. I would recommend that you check your personal credit score. We will give you one free at NAV, and you probably should be in at least the 700s before you apply for a business credit card because they will check your personal credit.
Another person asked, Gerri, when you have a small business running on your personal credit score and you have debt, how do you start building a small business credit score?
You can start by building relationships with companies that will let you buy things on terms and will report. So it doesn't necessarily have to be a line of credit or a loan. It could be, again, it could be working with a supplier that will let you pay in 30, 60, 90 days, and they will report that activity to the credit bureaus, and that could be a way to get started.
Okay. I think we have time for one more question. Our small business is incorporated as a sub-S, husband and wife, owners, shareholders. How do we separate, I'm sorry, the question's changed order here. How do we separate our personal from business credit?
When I was talking about separating business and personal credit, it doesn't matter what type of entity you have. It could be a corporation. You could even be a sole proprietor, although I recommend you do incorporate. The key is really to open a business account for your business. So you have a business checking account, you use strictly for that, and then you get credit in the name of the business itself. So it doesn't really matter what the structure is. It's really the matter of using strictly business products for business purchases and then you saving your personal credit purchases for your personal items that you want to buy.
Well, thanks so much today, Gerri, for donating your time. We've got to wrap it up now, but be sure to check out our other webinars linked in the attachments. Also, if you would like to find out what your business credit score is for free, visit nav.com/Manta, as Gerri mentioned. Thanks, everyone, for attending today.
Thank you.